From the floor of the CME Group on Tuesday, July 12th, in with MrTopStep. My name is Tim Hefke from Top Notch Trading. Boy, are these markets doing some big swinging for the fences. The last month and a half to 2 months, it's something else. I mean, just look at what happened last night. The S&P comes in, drops over 23 handles down to a key low of 1295 even, and I'm going to explain that why, but then rallies up to 1620 before we open this morning. Now this thing comes in, doesn't even come close to the low, and it's up above the 1620 level. Is the rally on? I mean, even the NASDAQ broke over 25 handles last night, only to bounce up and make new highs. Boy, I'm telling you, it's really a tough trade. And if you look at the bonds, just look what they did. They make a high of 27.15 last night after making a low of 26 even. That's a 1.5 on Globex. I'm telling you, this is like rolling dice. I think you're better off going to Vegas because your odds are better. I mean, if you get caught on these trades, you're in trouble. But let's go and explain how that 95 was a key low last night. When this future S&P now we're talking about made its year high on May 2nd, okay? And when it started deteriorating, it deteriorated in a hurry. But when it went on June 5th, it spiked down, and on June 6th, the high was 1295 even. That took it down to its 1252 half low. Then if you take the charts, the rally come back. We went up on June 28th. That high was 95 even before we closed that day. The next day we opened up at 93 half, 91 even was the low, 91 half somewhere in there, and we shot up and up to its current high of 54 half. So what's going on is that's a lower high than the year high, and then when we made our year low March 17th, that 52 half low that we made, what date was it, on June 16th, is a higher low. So right now what we're seeing is kind of a wedge formation as they refused to take out a New Year low when I thought they were going to make New Year lows. And then when they came back and I thought they would challenge New Year highs, they fall short. So lower highs, higher lows. Okay, from there, let's go with the bonds. Now the bonds, what do? They come back about 5 weeks ago, make a high of 2701. And in 4, 5, 6 days, they go down to 122.05. And then last week, we see a low of 122.25. And then last night on Globex, they're up to 127.15. Ladies and gentlemen, every point in the bonds equates to pretty close to 10 basis points. And it's phenomenal. These moves are phenomenal. I mean, I'm a technical trader, and on a technical note, it is a tough trade overall. The fundamental influence are having volatile, erratic movement behavior. I mean, you could be short, and the next thing you know, you got 3-5 handles against you. It's just not a good trade right now to come in and step in. Top Notch advises stalk, and when you see a good one, pounce. Today, the NASDAQ had the best bang for your buck, your best trade of the day. It opened up at 59 to 60, right at its upside pound level, took out its pivotal level of 52 half, and went right down to 41, its downside pound, quarter low in the mini. It turned back and rallied 16 handles. That's just one trade on a day-to-day basis, and that's what you got to do right now. Top Notch is going to just sit back. He's just going to enjoy the show because part of technical trading is learning how to absorb erratic behavior, and that's what it's going to take. Right now, the S&P, though, for today, they're going to go challenge its daily pivot at 1920, it looks like, followed by the short value level of 1980. And if that market turns there, we're going to climb up the ladder, have a good chance of testing yesterday's high at 27. It's phenomenal. All right, ladies and gentlemen. From there, I'm going to be on vacation. I won't be back until August. So until then, everybody have a good day.